Hey, and welcome to a new video. Today I want to talk about a topic in Forex trading which often gets overlooked, but it can be very helpful for your trading. And that's the concept of Forex Triads and how to use Forex Triads in your own trading. So first of all, it's important to understand that when we trade Forex, we always trade pairs of currencies. So for example, here you have the EURUSD, which means that you trade the euro against the US dollar. And this unique characteristic of having two currencies trading against each other enables us to use the information of triads to find trades and to filter trades. So a Forex triad always consists of three currencies and also then three Forex pairs. So for this triad, we chose the euro US dollar here on the left. In the middle, you see the US dollar Swiss franc. And on the right, you see the euro Swiss franc. So across all the three pairs, we use the euro, the US dollar, and the Swiss franc. And now just to show you that all those charts are very highly interconnected, we can calculate the exchange rate of the euro Swiss franc by just looking at the euro USD and the US dollar Swiss franc. So let's take our calculator, and we see that the current euro USD rate is 112.02. And the current rate of the US dollar and the Swiss franc is 0.9909. And when we multiply those two values, then we see we have 111. And when we look here on the euro Swiss franc, we see that this is also true. And by multiplying the two pairs here, then we get the third exchange rate. And that's how you can go on or across all the Forex triads and currency pairs, and you will see that this relationship is true because in Forex we have currency pairs trading against each other. But of course, this is also very useful when making Forex and trading decisions. So now you can see that across all the pairs, there's a very similar pattern. So the euro USD has been moving lower below the moving average and has formed some bottom now. The US dollar Swiss franc has moved up and formed a top. And the euro Swiss franc has barely moved up and also made some kind of top. So you can see all the pairs are looking very similar. The structure is very similar, although you can see here the euro USD and the US dollar Swiss franc have been moving much further and have been trending much stronger, whereas the euro Swiss franc has not moved that much and the trend here is not as obvious. So you can see that the euro and the Swiss franc are much closer when it comes to currency strength because those on the left and in the middle moved much more, and you can see the imbalance is much stronger. But when we now make trading decisions, let's say we want to trade reversals, we want to trade higher on the euro USD. If the moving average breaks, for example, then on the US dollar Swiss franc, we want to trade lower on the reversal and on the euro Swiss franc as well. So what now happens is, if you are not aware of the correlations, then if you take a trade on each one of them, then you are just increasing your risk because it's very likely that you get very similar movements on the three pairs. So if your normal position size is 1% and you take 1% on each trade, then basically you're having a 3% risk exposure on your trades because it's very likely that some or all of the trades are going the same way. But at the same time, you can see that the current setup is very similar. So what I usually do is that I take my overall position size. So if I want to risk 1.5% on a trade, then I just split it across three. So each trade I would risk 0.5. And then basically I would get my 1.5 exposure. Another very important thing is that you will soon see if you start following a triad is that usually two of the pairs move while the other one consolidates and moves sideways. So once you're in a trade, or once you're in a trade across all the three pairs, it's very easy to identify which ones are moving and which pair is just consolidating. So in this case, if you enter three trades across the three pairs, as we said, with a split risk, very quickly you will then see which pairs are actually moving and which of the three is consolidating. and then it allows you to cut the position on the third, which is not moving, and acquire a 1% risk across your trades, and also filter out high probability setups and reduce your overall risk, because you are only trading the ones who are actually moving and staying away from the ones who aren't. So to recap, currencies are traded in pairs, which allows us to use the feature of the Forex Triad. So you can pick 3 currencies and then plot the triad next to each other on your charts. It's also a very great exercise when you're just starting out. Then you can get a great feeling of how strengths and weaknesses impact currency movements. And then when making trading decisions, you can split your risk across the triad. You can then filter out which pair is moving, which is not. You can cut your position on the ones that are not going anywhere and stay in the high probability trades while reducing your overall risk exposure and filtering out low probability trades. And if you have questions around the Forex Triad, I will put a link in the description to a very detailed article around this topic as well.